hiking rates also could create challenges in the labor market. And on the flip side, a rate cut could spark activity in the labor market, but could create higher inflation challenges. And we are covering all things jobs this week as we look towards more inflation data coming up next week. And we'll also cover a little bit about how this all translates to the new Fed chair's path ahead. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered each week and hopefully share with you some of the data, the trends, the news we're watching in the markets. And again, this week is really heavily focused around the labor market more specifically, although we'll wrap this into how this may translate to what Fed Chair Warsh now may be looking at in the coming Fed meetings as we get towards the second half of the year. So let's start on the data. This week, we basically kicked off jobs week. Now, we do still have the unemployment rate and the U.S. employment rate coming out tomorrow. So we do still have another data point that is very heavily influencing the direction. So keep in mind, we're going off 3/4-ish of the data right now. But basically, we had job openings come out on Tuesday, I believe it was. Job openings jumped significantly. We're standing at 7.6 million job openings currently, or I should say, based on this most recent reading. We also had ADP Employment Report come out. This shows that we added 122,000 jobs. This was slightly higher than expectations. And then we had today initial jobless claims come out at 225,000. Although this goes a little bit against the other data points, it was slightly higher than expectations. This still hovers around what we're used to seeing here. So nothing too alarming, I don't think. And I think the other data points so far might outweigh that jobless claims report. But of course, again, tomorrow, we have the unemployment rate and the U.S. employment data coming out. So those will be important to watch as well to maybe round out this jobs week story. We also have inflation data coming out again next week too. So these two areas, of course, are the big areas that the Fed is watching and may start to shape this story even further than what I'm going to share that we're seeing so far. But what I did want to touch on before we break for this week is the question of the week is really around what to expect from the Fed moving forward, especially with new Fed Chair Warsh coming into the mix, how they may be interpreting this data. And maybe I'll highlight generally what we're seeing at the moment. At the moment, we're seeing that the labor market still remains to look actually pretty strong, even despite some of the cracks and the concerns that are still out there. Nonetheless, as a whole, labor market looks to be relatively strong. We also, of course, have inflation running higher than expected still. And again, from my perspective, I think that that's likely to continue for some time. Inflation can be very sticky. And so we expect that likely will continue still. So the way the Fed looks at these two data points, the two things they look at is the labor market and inflation. And then they also want to make sure markets are moving effectively. But those are really their two mandates. And so the way the Fed looks at these two areas of the economy in terms of rate hikes is basically what they think is that if they do hike rates, the philosophy is that brings inflation down. But hiking rates also could create challenges in the labor market. And on the flip side, a rate cut could spark activity in the labor market, but could create higher inflation challenges. So this is why they've been a little torn lately. Basically, if the labor market is strong and inflation is high, this could lead to more hikes because if they're not so worried about what this does to the labor market, if inflation is still running high and they believe hiking rates reduces inflation, of course, that could be the path that they look towards. However, I would share that the labor market, although showing some strength, isn't clearly solid at the moment. So it does create some confusion. And I think that's why the Fed's been kind of stuck at the moment. And what we expect, is likely no change for the foreseeable future still. However, this is where I really hope that we hear some more thoughtful solutions ahead, because I might suggest or might argue that rate movement alone isn't the largest impact to inflation trends in the first place. And I think that there may be some other tools that they can use that may help with inflation concerns that may also allow to do so without disrupting, businesses, consumers, and the labor market, which is, of course, their other mandate. So I think that is going to be interesting to watch. I think that we've heard a little bit of that from Fed Chair Warsh already, and it will be very interesting to see how that takes place or shapes moving forward here as we get a little more clarity, because again, I don't know that just moving in the interest rate, especially the one the Fed directly takes control over, necessarily impacts inflation as heavily as it might seem based on, what we've heard from the Fed over the years. And so when they are torn between this idea of inflation and the labor market, again, there are other tools that we can explore too that may help a little bit more, in my view, with inflation, and also may not disrupt the labor market. Again, we are seeing Fed Chair Warsh talk about that so far, very, very little bit, but nonetheless a little bit. And so it'll be very interesting to see where that goes. In terms of interest rates, though, I think it will be very interesting to hear some of his comments as he gets further into the mix. However, I think from what we're seeing right now, and again, keep in mind the Fed chair influences, but does not ultimately make the entire decision. That is a committee, excuse me. But I do think that it's likely we don't see much change in rates here, at least for the foreseeable future. End of the year, still a bit of a toss up, but at least for the shorter term. But it's very likely we could see a discussion go towards some of their other tools in the toolbox. So that's what I'm really watching. Again, I think that's what this data might suggest as well, where we have certainly stronger labor market, but not on solid footing necessarily, and higher inflation still persisting. I hope that helps. Be sure to tune in next week. Again, next Thursday, we're going to cover the employment rates, the employment report and the unemployment rate that we get tomorrow. We will also cover all the inflation data that we get next week as well. So in the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.